Today is April 12th, 3:06 p.m. and we saw some unusual options on block. That's SQ, also known as Square. We are also going to go over a trade idea based on the unusual options that is slightly different because it takes more buying power. And also wanted to point out the indicator here showing that it is oversold, possibly a bounce up. Also, the news report talked about these unusual options activity today at 12 noon. So, which was very interesting because it's actually bullish. And you'll see here 58% bullish, 41% bearish, Benzinga's options scanner. And we wanted to go over this because we actually are not bullish. So we wanted to explain why. And so if we look at the options, you'll see here at 11:42 at the 20-second mark, you'll see these three options on the May 5s. Okay, so keep that in mind because then we also see these at 11:42, also at the 20-second mark. You see these options as well. And you'll notice that this number is slightly different. The 70 put strikes and the 60 put strikes. However, if you look down a little bit further down, you'll see here at that 11:42 20-second mark, that 70 put here, there's that 407 right here, right? So same date, the 407. If you were to add that 226 with 407, let's put that right there so we can see it all. 226 plus 407. You'll see here that 2633 actually matches with this 60 puts here. And so that's quite interesting that it was broken up. So that's sometimes difficult to tell, but you have to analyze this more in detail. And so what we think is going on here is if you look at the April 21s and look at the 60 put strikes, we can take a look there. This over here was the 70 strikes here. So you'll see here the volume is less than the open interest. Also here, less at the 60 strikes. So we think these could be closing orders that originally they were there was a bull put spread and that's being closed now. Or yeah, even if it's an opening order, then if it's an opening order, then they are shorting it even more. And so either way, they're removing their bull put spread, their bullishness off of that now. And then at the same time, going to the May 5s and then buying the 60 strike puts. You'll see here the volume is greater than the open interest, and then the 50 strikes too, right? And you'll see that here. So they're buying the 60 puts, selling the 50 strike puts, and then also selling the 80 calls. Here you'll see here, this is greater. Okay, so what does that look like? They are selling that, buying that, and then selling that. And so this is a short position. You could see that here as the price of Square at 63.41 goes down, it becomes more profitable. You'll see anything above the zero line here is profit. And so they're minimizing their loss in case Square does go up all the way to 80. Their losses is capped here at that 180 is per contract is their cap. Their theta will be very strong here to push it back up to minimize their loss if it's getting closer to 80. So that's the their opening trade here, and in case Square does go up, they're leaving a lot of room for it to go, and then reducing their risk here. And by selling that call, they're minimizing their theta decay. So you can see here their theta is not very negative, close to 0. And if it does move up or down, the theta is then positive. So that's something to keep in mind. And so because this takes up a lot of buying power, we did a different trade than this one. Let's go over our trade. And when our trade here is actually, instead of buying the 60 puts, we sold the 60 puts. You'll see here the volatility here is 72. So we like to sell a volatility that is higher than the option that we buy. So we sold that and we bought the May 19th. And that volatility is 64, so that's less. So that's why we like to buy something less than what we sell. So that's this trade. It's going for 303 now. And it is also bearish. And so it profits as the price goes down. And it has a loss as it goes up. And we will kind of monitor this and cut our losses if it isn't going the direction we had anticipated. The theta we like here, it is positive too. We also like the Vega. It's all positive because we believe that Vega volatility will increase as we get closer to the expiration date of the May 5, because earnings is coming up on May 4. You'll see that here. So keep that in mind as if you're going to trade Square, that this earnings is coming up. We think volatility will increase. So making sure our options trades have a positive Vega is helpful, because volatility always increases up to earnings and then it drops. So our thoughts on this is that as long as it doesn't break that call, that 80 call, which is all the way up here, right? So it has to break that 80. That's why they sold those 80 calls, to finance the bear put spread. So there's that potential that it will drop even more, even despite this oversold condition, and despite the Benzinga options report here. So I guess we'll find out if this Benzinga option scanner was correct or if we were correct, right? So they're bullish, we are bearish. So yeah, if you found value in this, please subscribe, and you can hit the bell icon, get notified whenever we see unusual options, and explain why we think this, and try to teach as many people as we can to use unusual options correctly and accurately to predict stock moves. Okay, and take care, everybody, and good luck. It helps our channel grow, and take care.